Hey guys, Adam Rose, Vice President and Senior Loan Officer of Western Ohio Mortgage here in Sydney, Ohio. This is another episode of the Mortgage Guide podcast, and this week we are going to talk about recent college graduates and buying a home and the opportunities available there, as well as thin credit score borrowers and some USDA updates and some good news, actually. And we're going to get to the good news last on some changes that USDA is making. So, super excited about that. Obviously, if you've seen some of our recent Facebook posts, I'm a big fan of USDA. It's my favorite program. I think it helps a lot of clients out. It's very flexible, credit score wise, and a lot of cool things you can do with it. So let's talk college graduates. All right, so it is upon us, right? We are in April, May, and late May and early June. People are going to be graduating from college, and they're most likely going to be moving into mom and dad's basement because there's no place to go, right? Rents are extremely high. There's limited rentals available. There's limited inventory on houses, so maybe they sit in the basement, save up some money, and they're looking at buying that home and getting ready. But, a lot of people, and there's a lot of misnomers out there that you have to have a 2-year work history. Well, it is nice to have a 2-year work history, but it is not a requirement to have it in order to finance a home. So, FHA, USDA, let's talk about that a little bit, because that's what we're going to focus in on is non-conventional on this entire segment. So recent college graduate, I don't know, let's say it's May, we're graduating in a couple weeks, you're an engineer, it doesn't matter. So it doesn't matter what the degree's in or anything like that. It's nice that you follow what your what your degree's in regards to your career. That's a plus, right? That you're using it. But let's say you're graduating on June 1, and in the middle of June, you have a start date from an employer, and you have a salary, what have you, okay? We can actually use your college transcripts as part of your 2-year work history to show that, and we can actually use your offer letter or your letter of employment from them as your income, okay? So what's got to be on there, though, all right? So this gets a little tricky, and we have to confirm it with the employer, of course. It's not just give us a letter and we're moving with our day. So we're going to reach out to the employer to validate it, but it has to be on their letterhead. Has to be from a direct supervisor, HR, something along those lines. And it's going to spell out a few things. Obviously, your contact information, who you are, what your position is, what's your wage going to be? Is it hourly? If it's hourly, are we guaranteed 40 hours a week and no less? What's that situation? Is it salary? Fantastic. Also, the biggest piece on here is there an elimination period or a trial period? However you like to look at it. What that is think of it as sometimes temp agencies do this, right? So they send out a new worker over to a plant or something like that. There's a 90-day trial period that says we're going to see if this guy's going to work out for us, or this gal is going to work out for us or not. We have 90 days to decide whether we want to cut them or we're going to keep them on. That's the 90-day elimination period or trial period. So as long as there is none of that on there, we can use that as your income and your projected income. The big thing here is it can't be really far out. So let me give you an example. Let's talk about college graduates that are maybe going into teaching, right? So your teaching contract might go into force in like August 1, okay? Well, we have to ensure that your job you start getting paid before the first mortgage payment is due, all right? So if you aren't going to start until August, more than likely we can't close any earlier than July because your first payment date will be September 1. All right, so just a heads up there. So very neat. A lot of people aren't aware of that. It's not exactly advertised everywhere. But if you are a college graduate or about to be a college graduate and you want to hop into the housing market because you've created some credit, this is a great opportunity. Okay, so that's that. So let's talk no credit score borrowers or thin credit score borrowers. So there's a lot of people out there that have this other conception that you cannot buy a house if you do not have a credit score. Incorrect. So I used to live off no credit score borrowers back in 2012 to 2015, 2016. It's getting a little bit harder to do them. I can tell you this, if you're a no credit score borrower and you're going FHA or USDA, it's not beautiful, right? It's not a great rate. The costs are higher. There's some negativity to it, but it does not eliminate you from having the ability to purchase a home. So how does it work? All right. So both USDA and FHA allow the no credit score borrowers. So what we like to do is we like to get rental history. So we have to create something called alternative lines of credit. Alternative lines of credit are things like rent reference, utility bills, car insurance, phone bill, what have you, right? Contractual debts typically. And this is what we're going to talk about on USDA updates here in a second. So what we're going to do, because we want to see you have housing history, because you're going to be going from rent to, most likely in this market, housing shock or payment shock, right? Because your house payment is going to go up compared to what you're paying in rent. So let's say you're no credit score borrower because you don't believe in credit score, or you don't believe in credit cards, you don't believe in auto loans, what have you, you pay everything in cash. So we can reach out to your landlord via third party through the credit bureau, and we can do a verification of rent. So what they're looking for here is when we create this alternative credit, that you have 12 months of history. Not 2, not 5, not 6, not 11. 12 months of history on the alternative line of credit, okay? So you have to have a 12-month rent history. Well, if you have that with USDA, it's beautiful because you only need that and one other. FHA's hard line with 3. But we can add a utility bill. So if you have 12 months of rent, more than likely if you have the water bill, you have a gas bill, you have an electric bill, you're going to have 12 months of that as well. So we can add that in. We only need one bill, right? Because we're going to send it to the credit bureaus. They're going to contact AES, Vectran, whoever, right? And they're going to verify and validate that you have no 30-day late payments as if it was already a credit card and auto loan. Same concept, right? They got to document the payment history. So we get those back, we're moving on our way, right? That is now your established credit history in order for you to qualify for buying a house. So rent, utilities, car insurance, phone bill, anything contractual. We've even had rental units, like storage units, so we could add that. One thing that people really don't talk about is, and it's a challenge to do, is let's say you came up with 2 lines of credit, all right? You just can't get that third one. Well, one option, and we've done it a couple of times, it's a challenge, but a savings pattern. So both USDA and FHA allow the third credit line to be a continual pattern of savings. So if you have a savings account, we're going to document 12 months of that statement and show that you have consistently contributed to that savings plan, right? Monthly, weekly, however, as long as it's going in monthly, you're good. And it's going up constantly. You're not putting money in there, taking out $1,000, right? It's continuously going up, right? So if we get 12 months of bank statements showing that you have a savings pattern, that can be your third line of credit. All right, so that's huge, and a lot of people don't pay attention to that. Hell, I forget about it half the time because we just don't use it very often. So that's thin credit, guys. So if you don't have any credit, you haven't created it, don't write off that you can't buy a house. Again, terms aren't as favorable, but you can still do it. Okay, so I want you guys out there that are a little down in the dumps about being able to purchase, if that's the case, because you haven't created any credit and you hate it, you can still do it. Okay, so one ad that we have, so USDA, I actually just got off the phone with my underwriter. I think she's willing to keep it a secret from me because she knows I'm going to use this, because I've tried it in the past and I've made arguments with USDA about it. Is on May 6th, that's my understanding per the release, they are going to now allow membership services to be alternative lines of credit. What is a membership service? Think streaming service. Netflix, Hulu, Amazon Prime, you name it, right? I can now use a 12-month payment history and document there are no late payments, which there never is. It's on automatic withdrawal or on your credit card or whatever. And I can now use that as an alternative line of credit to get you in the game to buy a house. Isn't that crazy? That's nuts. So so that's the exciting news. And I mean, this is going to open up the door to so many people that might have thin credit, because everybody has a streaming service. It doesn't matter. Disney Plus, you name it. Everybody's got one. So remember, the key on this alternative credit, though, is 12 months. You got to have it for 12 months, okay? And then we can get you in position to purchase a home and get a little piece of the American dream. So that's all I got for you guys this week. I know it was a little bit long-winded. It might have been a little confusing. If you have questions, feel free to reach to us here at the office, and we will answer any questions that you have. But that's it for us this week, guys. Remember, subscribe on YouTube. Check us out on Apple Podcasts and Spotify, and we will catch you all next week.